All right, so I'll be going ahead with the class. So today I'll be teaching you about crypto. I'll be starting from the scratch. Now, a lot of persons have heard about cryptocurrency and blockchain. But the most interesting thing is that most persons, especially in this side of the world, don't really understand what cryptocurrency is because of their individual experiences with different kinds of crypto, like because of different kinds of crypto, like Ethereum, Tron, and the rest, because Ponzi schemes were built around these cryptocurrencies. We have the likes. We have some kind of Ponzi schemes that were built around these cryptocurrencies. So people didn't have the fundamental knowledge. They need to be able to set them on the path. And the most interesting thing also is that crypto has come to stay, and crypto is like literally the next phase of development and all. So, and in crypto, you can see massive profits. Like you can use little to make so much more. If you're looking for that form of legit blood money, that's crypto for you. But then crypto also comes with its risk. Its risk, and you need to be able to manage your risk well and to be able to manage your profits well. If not, it'd be like you putting money, putting a pinch of salt in a drop of ocean. You keep on losing losing the money. So there's a whole lot you need to learn in crypto, and you don't stop learning it. But you can start. There are basics of trading. So as a person that is new in this space, you need to learn what is crypto, why is crypto here, why should you involve yourself in crypto, and then you learn the most basic part of monetizing crypto is crypto trading. Now, crypto trading is just one part. There are myriads of ways of monetizing crypto. We have staking, we have liquidity provision, providing liquidity. We have master nodes. We have different ways. We have different ways to monetize crypto. We have apps that helps you earn interest passively. We have passive income ways of monetizing crypto, and then you can either trade crypto or you invest it. So now, sorry, excuse me. What are cryptocurrencies? Cryptocurrencies are digital money. They are digital money. These are like they're like codes encrypted, but you can use it. They can serve as money for you. You can use it to pay for goods and services, and you can also accumulate them as assets. Now, in the past few months, some cryptocurrencies have given mad profits. In crypto too, you need to be able to also understand what we call how to use information at the right time. Because in this space, information is power. And that information is useless to you if you don't utilize the time well. If you don't utilize the timing well, that information is worthless to you if you don't utilize it at the right time. So in cryptocurrency, information is important. Information can make a difference between you having $1 and $100,000. And then timing is also important because right now the cryptocurrency is always volatile. It's never fixed, never in a fixed position. So today, this minute, the value of a coin can be very cheap, and the next minute it can go up so high, and the next minute it can go down so low. Of course, there's so many cryptocurrency market is ruled by sentiment. That is, now we are facing the elections and all. It can impact the market. You see instability in the market, like the price of Bitcoin will not be stable for like up to like 15 minutes or 4 hours. It just keeps moving up and down, moving up and down. So you wouldn't even know what move, what to do, either to take profit going up or take profit going down. So there's so many things you have to learn, but the basic things you need to also do. Now, if you're going to start trading crypto, you need to start from at least spot trading and then diversify. On the side spot trading, you can then diversify into trading margin, trading futures, and all that. And then you can, if you're looking for passive income streams, you can easily diversify into staking. And then those ways for you to just put in your money, buy some assets, and then watch them appreciate in value over time, and also give you dividends. Now, let me just give you an example of what it means to like be patient. In this space too, you need patience. Now, I'm already telling you like some things that will really help you in this space. Most times people come into this space with a mindset of a Ponzi scheme mindset, whereby you put $50, expect to make $100. You expect to make like 100%, like put 10K, get 20K kind of mindset. But that's not it. I like telling people to have the mindset of as if you're buying a land, you're investing into a land. It helps you to know that if what I'm buying is a good asset, if it's a good crypto asset, this is going to appreciate in future. So even if the value is down today, it's going to be very much valuable tomorrow. Because most people have truncated their profit they're going to make by selling off too early because of fear. There's what we call FUD in the crypto market: fear, uncertainty, and doubt, whereby you are so afraid and then you go and sell off only for the price to like go up so high. Let me use a coin to give you an example of what I mean. Look at this coin now, XOR, Sora Network. Now, you will see by yourself. Now, this Sora Network, let's look at in the past 3 months. I want to show you something. This coin, or let me just do in the past 1 year. So you'll see at the time, on 15 July, between June and July, this coin was less than $20, less than $10. It was about $1. But between July and August, this coin goes all the way to $120. Do you know how much that is? Now, impatience, not being able to wait for 1 month would have made people to lose money. And then even if somebody is holding the coin and then the coin depreciated in value, because over time the coin dropped. As of today, the coin is at around $60, half the highest price that's been. So impatience would have made someone to sell. Look at between June and August, the price got all the way to $120. Now 2 months. If someone is giving you predictions, trying to tell you, okay, some analysis there, this coin can do this, have the capacity to this amount. You'll be like, he bought you the coin not even moving. You go ahead and go and sell. You miss out on profit. So you have to be able to know how to control your emotions, know when to enter a trade, and know when not to enter a trade. Also remember that it's not all trades that you enter into. I'll recommend some videos on my YouTube channel. I'll recommend some videos in my YouTube channel, like for those people that are still very, very, very new, so that you can watch them and understand at least the basics. Why do we have crypto today, and why is crypto not going anywhere? Crypto has so much value. Like every day, what new aspect of crypto comes out. Like we went through a period of DeFi craze, whereby DeFi gave people command profit. Look at YFI. YFI got up to all the way to $40,000 for one, and now today, YFI is less than $12,000 today. So you see, people that were able to cash in to make profits between the time it got listed at less than $1,000 and it got all the way to $40,000 would have made profits. And then people that couldn't sell off when the price was there, because at some point it moved between 20 and 24, and then now it's dropped all the way to 11,000 plus. So timing is very important. Now, if you know a coin is very good and you realize that the portfolio has really dropped, you can wait it out. That's why I used to say, invest what you can afford to lose. It helps you to check your emotions when you are trading. Me, I'm never letting go of crypto. All I have to do is just learn more ways to maximize it. Now, from DeFi, we moved to NFTs, non-fungible tokens, and then we now moved to we are into digital identities, DID. Now, any coin that you buy that's within this DID now, you expect it to make profits. You expect those coins to make profit, to be on profit. So, like, okay, now there's another coin, XDAI. Let me show you another coin that also, if you, I'm just trying to show you an example there, why patience is really important in this space. There are people that are long-term holders. People that really enjoy profit in this space are people that are patient and that can really hold a coin. Because sometimes you buying and selling within a very short time frame might not really give you as much profit, like maybe 10%, 12% or something. But you being able to buy a low sat coin, where the beauty is sometimes is buying a low sat coin. What do I mean by low sat coins? Low sat coins are those coins that have a very little, their prices, the Satoshi prices are very, very low. Because by the time that coin gets to $1, you'll be on lots of money. Imagine a coin that you buy at one sat. For it to get to $1, it has to get to 10,000 sats. You know how much that is? $100 into a coin at one sat, and it gets to $1. That is plenty more. Like, you be a millionaire. But what does it take? It takes lots of patience. Now look at this coin, XDAI. This is another coin that's going to do massively. Now let's just look at the 1 year time chart. This coin got listed this year in May. Now, from May, as of August 2, it got to its all-time high of about $40. Just buying this coin at less than $1 and you just holding it between May and August, 3 months, 4 months, and you would have made plenty money. So my advice, before I get into like showing you how to trade, is that you should learn the principles that will help you manage your profit better. Choose who you want to be. Do you want to just be a regular crypto trader who takes little profits? Do you want to be a holder, an investor who buys and holds for profit? When you make profit, you sell off and then wait for the next one. Note that there will always be cryptos available. So don't try to be afraid of missing out, because you cannot buy all the coins out there that are good. You cannot buy all the coins out there that are good. So on that note, I will explain to you how to buy and sell on our two crypto exchanges. I'll take you step by step. Do you have any question at this point? Ahmad B, it's Akalechi. Do you have any questions at this point? All right. I'm moving forward.
No question, you can.
Okay. All right, moving forward. So I'm going to take this class step by step. Now I'm using this OKX as an example because I work for OKX. So I use OKX, I use Binance. First of all, cryptocurrencies are digital money. The place where you can buy and sell cryptocurrencies is called exchanges. So exchanges, we have centralized exchanges and decentralized exchanges. Difference is that with centralized, you don't have access to the private keys and all that. It is custodial in the sense that it's custodial in the sense that if you lose access to your account, you can easily go to your customer care and then they will help you recover your account. So some exchanges are centralized, while some are not. An example of centralized exchanges is OKX, we have Binance. So it means that if these exchanges have problems, you lose access to your funds. So that's why they usually say, not your funds, not your keys, because they are centralized and they are subject to hack. Though some of the exchanges have reputations for really having insurance backing their funds, and then having high security and all that. But the point what I'm trying to draw is that if you're making profits, you can be taking out your profit and put it in what you call a non-custodial wallet. Non-custodial wallets are wallets that for you to access it, you just have to put in your passphrase and all that. For example, we have Trust Wallet, we have Atomic Wallet. So when you make profits, you just move them there. That one, if you lose access to that non-custodial wallet, you will not be able to get the access back, because those that made the wallets don't even have access to what you have. So they can't help you to retrieve it. So you need to be very careful with your with your keys and your passphrases, your recovery phrase. You need to be very careful with them. Those 12 words, 16 words, and all that. And then with centralized exchanges, you go the extra mile to secure into what we call two-factor authentication. And the two-factor authentication method we use is Google Authenticator, linking your account with Google Authenticator to make sure your accounts are safe. And if you're going to trade, one security precaution you must always note is using a fresh trading email. Don't use an email that you use on a regular basis for other life purposes, for trading, because people are looking for ways to hack you, and they're looking for ways to send you phishing emails. And before you know it, you click on that link and then your funds are gone. So you need a fresh email so that you know that everything you're doing with that email is just strictly trading and nothing else. It will take you up to 5 minutes to create a trading email. So now we're using OKEX. There are different kinds of ways to monetize your crypto on an exchange. We have spot trading, that trading types. Now we have trading types. In monetizing crypto, we have trading, we have staking, we have masternodes. I think what else? For now, then we have in DeFi parts. In DeFi parts, we have adding liquidity and all that. So in trading, we have spot trading, we have perpetual, we have futures, we have margin leverage and all. The difference between spot trading and the rest is that with spot trading, you make profits only going up. You buy low and you sell high. But with other forms of trading, what you're doing is you're predicting, you're trying to take advantage of the market whichever way the market goes. Whichever way the market goes. So if the market is going upwards, all you have to do is be able to predict correctly that the market is going to go up. So you trade up. You do what we call you long your market. And then if you predict that that market is going to go down, you short your market. You short your market. So first of all, I want to take you through spot trading first. Now, you are in my community, in the premium community now. You get signals because I'm going to start giving signals from tomorrow is what? Tomorrow is 4th. So everywhere we just calm down. You get signal. A typical signal contains the name of the coin, the pair, the trading pair, where you're going to trade it on, that's the exchange, entry price, selling price, and most probably stop loss. Now, I'm going to usually you get the price of the coin based on the Satoshi price or USDT price. USDT is the crypto version of the US dollar. So USDT Theta has the same valuation as the US dollar. So it's called a stable coin. Stable coins are coins that never drop in value, no matter how much the market misbehaves. So excuse me. So sometimes if you suspect that the market is really going to dip, because another dip might come within the first quarter of next year. a major dip, like the dip we experienced this year. So for now, it's going to be like minor volatility, just like the market usually does when there is an event and all that. So let me just get right into it. So we're doing spot trading. Excuse me. First of all, if you're going to use OKEX, you need to first of all deposit your coin. You deposit your coin. When you want to deposit, you come to your assets, you go to deposit, you select what you want to deposit. Now, it takes each coin have different time frames for them to be able to go. BTC takes a lot of time on the network because of many users on the blockchain network. So sometimes for me, if I want a coin to like arrive very fast on the exchange, I use USDT, Ethereum, or Tron because they are very fast. So BTC sometimes might take up to like 30 minutes for you to get to where you're sending it to, and sometimes also up to an hour. But if we use USDT, it's cheaper and it's faster. If you use ETH and Tron too, cheaper and faster. When you get to the exchange, I can convert it back to BTC and then use it for whatever I want to use it for. So let's just say for in this case, I want to deposit BTC. I just select BTC and then look at deposit address. This is like your bank address, your bank account, the way you have your account number. But in this case, each address is unique to every coin and every exchange. You cannot use the BTC address as OKEX. I use it on Binance. Binance BTC address is different. OKEX BTC address is different. Now we'll get to network and all that. Like if you're sending Ethereum now, we have what we call ERC20 Ethereum. Then we now have what we call what's the other one? Okay, like let me just use USDT for example. USDT have ERC20, has TRC20, and the like. So it has like up to like 4 variations. So if you have to be sure that the what you're sending is going to exactly where you wanted to get to. Like now, look at this BTC now. There's USDT Omni, there's USDT ERC20, and there's USDT TRC20. So you have to make sure you confirm the network of USDT you want to deposit. So in this case now, we're dealing with Bitcoin alone, and Bitcoin is just Bitcoin. Excuse me. So you copy the address, and then you send it to wherever you're getting the crypto from. Like now, if you're buying from all these payment gateways, like Bundle Africa and the likes of it, Bundle Africa, Luno, or you buy from a merchant, you send the address there, and then you send your BTC, and within some minutes, it will get to your account. So when it gets to your account on OKEX, it will appear in your funding balance. It appears in your funding balance. Now, the essence of having a funding balance and a trading balance separately is that it's possible that you might not really use all the funds in your wallet to trade. So maybe you have deposit like $500 and you want to use only $100 to trade. So you just pull out $100 and you send it to you click transfer, and then you move. If it's BTC that is sent to this place, or it's token part, you select BTC, and then from funding account, you then go to send to sports, because what you want to do, you want to do sports trading. Now, when we get to futures, I'm going to teach you futures how to use futures on OKEX. When we get to futures, you learn how to trade futures, because futures is one way to like really maximize your profits. Like you can make money however the market is going. The market is going up, you can make money. The market is going down, you can make money. So futures is very good to learn how to trade. So you click transfer all, and then you confirm. When you confirm it, it will now appear in your trading account. Now you'll see P2P spot margin perpetual futures options. In this scenario now, we are trading spot. So you click spot, and then you see your balance in spot. So now that you've moved it to spot, here on OKX now, we have different features that will help you maximize your crypto. So apart from normal trading, you can participate in Jumpstart or Earn. Earn is you don't want to trade with your fund, and then you want to passively earn from your fund. So you can just put your money here and then passively be earning, like as if you passively earn. Like right now, we have savings. You can earn by saving here, or you participate in jump. Jumps are usually like some new crypto that got newly listed in the market, and then you can earn more of that crypto by staking OKB. So let's just go get right into the spot part. So let's just say that I sent you a signal and said buy wing USDT, and I give you a price. Normally the price will come in both Satoshi and dollar value, but in this case we're dealing with USDT, which means you're seeing both the you see the USDT value and the dollar value. So you look at the price. Now there are two ways to enter that trade. I'll give you an entry point and a selling point. Okay, let me use I'll give you an entry point, a selling point. So I remember I said you should buy it at $9. What you have to do is that you look at this place. This is the current market price of this coin. And most likely, I must have told you to buy at $9.3. Now, right now, it's not at $9.2, it's at 9.2. So all you have to do is look at this. This is sell wall. The one in red is those that are selling, and the one in green are those that are buying. But since you're buying from someone that is selling. So there's three ways to go about this. Either you edit this price yourself. I put 9.3 based on the price I put there to be able to buy at those points. And then you put the quantity 100%. If you have $100, you want to use only $50 to buy it. You put $50 and then you put $50 and then wait for your order to fill. Or you just use market order, market buy order. Market buy order, you're saying that you want to buy at the current market price, whatever the market price is. So you're not bothered about putting the price yourself. All you have to do is put the quantity and then you click buy wing. It automatically buys the wing for you. You buy the wing. And then what I always advise my people is that as soon as you buy a coin successfully, you should go immediately and set your sell target. Go immediately and set your sell target, because this market is volatile. Maybe you're expecting like 20% profit from this coin. If you're expecting like 20%, all you have to do is come to your order types, select limit sell order, and then maybe you want to sell at $10. You bought at 9, and then you want to sell everything you have at 10. Or you want to sell at 11. Or you want to sell at 12. Or you want to sell at 13, depending. You now put 100%. You click sell. You're saying, but most likely, I'll put that my coin I wanted to sell off at. I want to sell off at $20. So I put sell. So because the price have not reached $20, it will be in your open orders. It will be in your open orders. So, and as soon as the price hits that $20 that I set for myself, it will sell off. And you have your funds in USDT, both the cash you used to enter and your Jara on top. And when you want to make withdrawal, let's just say you want to withdraw your money, you make profit, you want to withdraw your money. So you come to assets, you click withdraw, and you select okay you want to withdraw. Okay, it's not showing because my coins are in my coins are in trades. So my coins are in trade. So you say you call a token and you want to withdraw, and then you withdraw it. You now place the address of where you're sending it to, and then you withdraw. So this is simply how to buy and sell on OKEx. Subsequently, I'll explain how to trade futures. Like now, I saw Bitcoin at 13.5. If I had long this coin for 13.7, I would have been on profit. That $200 margin would have been a profit for me. So that's the beautiful thing about using trading futures and all that. So any questions so far so that I can all right. So I'll share this link and then we'll start again I'll explain Binance. So thank you for being a part of this first section. If you have any questions, just drop it in the group and we'll continue with second part of this class.